Hey gang, it's December 31st. Time to say goodbye to 2025. Here's some rate and financial highlights to share for the past year. Before getting into the data, it's worth noting that today marks Warren Buffett's final day leading Berkshire Hathaway. He took control of the company back in 1965 and is now retiring. He's arguably been the most influential figure in U.S. stock investing. He will be missed. On the national economy, inflation has been slowing recently, falling to around 2.5% after being above 3% earlier in the year. While this is still higher than the Fed's long-term target of 2%, the positive news is that inflation has been trending in the right direction over the past 4 months. Looking at jobs creation data overall this year, most indicators show the jobs market weakened. In early 2026, the government will release revised job numbers for 2025, which will tell us whether the economy ultimately added or lost jobs over the past year. As for stocks, 2025 was a solid year, of course AI being a huge driver. The Dow rose about 13%, NASDAQ gained about 20%, while the S&P 500 was up roughly 16%. In California's housing market, existing single-family home prices rose about 1.2% over the past 12 months through August of 2025. At the local level, Zillow data through November 2025 showed Sac County home values down about 3.3% year over year, Placer County down about 1.4%, while El Dorado County was actually up 5.1% over the same period. Regarding home prices, it's important to note that real estate trends can differ significantly by neighborhood. If you're planning to buy or sell a home in 2026, this is a great topic to discuss with a local real estate agent who understands your specific market. Regarding mortgage rates, 30-year conventional mortgage rates fell by about 0.75% from the beginning of the year, ending just above 6%, while FHA and VA rates dropped by about the same amount, finishing at about 5.75%. Looking ahead to mortgage rates in 2026, there's simply too many variables that exist to throw out some figures, but I will share the comments that there are arguments suggesting rates could move lower. One major factor is the possibility of a new Fed chair who may strongly favor additional rate cuts. We're expecting to learn who that will be next month. Also, if the jobs market continues to weaken, that would strengthen the case for the Fed to cut rates even further. But the fly in the ointment for lower rates could come should inflation reaccelerate. That's my 2025 financial market highlights. Hope you enjoyed it and have a blessed new year. Thanks.